Well, hello everybody and welcome to this episode of the ESG and Tech Show. My name is Susan Hayes-Cullerton and I'm delighted to be here with you today to have a conversation about a topic that has really shaped a way in which our lifestyles are so different, looking as a result almost imperceptibly than another time frame. And that is all around finance, how we use money, how we spend money, how we invest money, how we transfer money between each other, how institutions are viewing us and how they're making decisions about us, and also as well all around how things are done in the background. So whether it's jobs to be done related to blockchain, or whether it's jobs to be done related to audit, or whether it's jobs to be done around verification, all sorts of things like that. We are going to talk about a whole host of things today during the ESG and Tech Show. So first and foremost, please do pop in there into the chat. Just tell me, where are you joining from? Always the way that I like to start our episodes is to find out exactly where people are tuning in from, so that I get a sense from a global perspective who I'm talking to and where. So as I say, please do pop your location there into the chat. At the moment, I'll get the ball rolling. At the moment, I am joining you live from Dublin, and I'm joining you right here from my office in Dublin in Ireland. We're almost at the end of what really has been a heat wave at this stage, and I see Alton is joining us from Orlando, so you know all about it. Herman is joining us from Rotterdam. Herman, I was in Rotterdam, I'd say about 5 years ago. I had a meeting there, and so one time I stayed in a yacht hotel, actually. So you're really, really welcome. Hello, Humayun, you are very welcome. You're joining us from New York City. Great to have you here. John is joining us from Boston. You're very welcome. Frank is joining us from Arizona. You know what I have to say? This actually, I don't think has happened before. So far, everybody who has chimed in with a location, I've been to Orlando, Rotterdam, New York, Boston and Arizona. Now, I wonder if Arizona counts, because I literally had touched down in Phoenix for a while, so I don't really know if that counts. Okay, Joseph is now joining us from Rain in Louisiana. Been to Louisiana. I'm not sure if I've been to Rain though. Hello, Alberto is joining us from Miami. You're very, very welcome. And also Yak is joining us from Israel. Now there's a place that I haven't been. There's a country I haven't been. So it's great to hear where everyone is tuning in from. So again, pop them there into the chat. It's always great, as I say, to hear from where you are. Spiga is joining us from New Jersey. Yep, been there as well. I suppose really I should be saying been there and bought a t-shirt, but I haven't actually bought t-shirts in any of these places. Good morning from the South Shore of Montreal. Hello, Stefan, you are super welcome. I see we also have Sukraj is here as well from Toronto. You are very welcome. So far we are seeing a mix of the US and Canada. Some people in Europe. We've got people here from Israel, and who knows, there could be people here from other parts of the world. So please do pop in where you're tuning in from. Whether if you're in the US, tell us what state. If you're in any other country, please tell us the area. Oh, hello, Monsieur Fonseca is joining us from Portugal. Beautiful, beautiful, beautiful country. 3 years ago when I was there, my friend got married in Portugal. Super, super part of the world. Alberto would like for me to help the market make up its mind. Well, if only I could do that. Wouldn't that be something? Well, now that we have got a sense of where you're tuning in from, and as I say, please do pop it in the chat. When I look down, I have my phone right down here, so I can see what's happening there on the chat. Just in case anybody is not familiar with how YouTube video works, right now I am live. It is now 4 minutes past 4 here in Ireland. It's 4 minutes past the hour wherever you're tuning in from. And it is Wednesday, the 20th of May. So we are live. If you are tuning in, looking at the non-live version of this, of course, please do pop any questions or comments into the comments area and we'll come back to you. And also for anybody who is here and is just unfamiliar with the way in which the chat works, is that if you can't see it on your phone, then you just need to minimize what you are looking at and then press the chat button and then it'll all appear. And that's where you'll see where everyone is. Okay. So let me tell you a little bit about the ESG and Tech Show, and particularly what we're going to focus on today. ESG and Tech is looking at the two biggest trends that I believe are going to underpin the next decade, and they are sustainability and technology. Now, I have a really keen interest in technology. I'm always looking for ways that I can automate processes. I'm always trying out new tools. I have one for you today. I always have new tools for you. I love looking at ways that technology can assist what we're doing. I certainly understand that a lot of people are worried that technology can take jobs away. Personally, I think quite differently to that. I think technology, in my opinion, takes away boring work so that then we can focus and have a really good focus instead on the work that is far more interesting. So if we can automate tasks that are repetitive, well then of course that gives us an opportunity to be more creative and to do things better. Now, of course, you might say, well, Susan, that's fine if you want to keep up with that. Now, I also work with people who like routine, who like doing similar things, who like the stability of their jobs the way they are. And I would still say that technology can still be helpful because I find I'm one of these people where I find tools and techniques, and I have an array of them at the moment that I'm implementing, whereby I can design, like when I really crack the code. And when I say code, I mean, I'm not a coder. So when I say crack the code, I mean to really understand how a workflow works or an automation works. Then, of course, I need to be able to work with people who can implement them. And that's where the stability, the security lies. Because then when I can point the way, then I'm giving them a whole new skill set for how they can go and implement things as we go along. So let me see here. Maria's here from Maine. Hello indeed. Maria, you are very welcome. And Baha is asking how you're doing, and I hope you are doing good. Now, specifically today, in the case, I'm to go back to the ESG and Tech Show. From the ESG side, right, I am always interested in how ESG and technology are co-aligning, right, for years and years and years. And I'm a CFA charter holder. My background is that I'm a chartered financial analyst charter holder. We learned that in the pursuit of returns, you had to solely look for returns. Now, how do we find returns? Well, we find good dividends, solid, sustainable ones, and particularly ones that are growing. That is a really good way in order to find good, solid stocks that can keep growing and do very well, particularly over time if you have a diversified portfolio, right? So we know that. Second, we know that if you buy low PE stocks, again, diversified over time, that they generally will outperform the market because you're paying a lower cost for their earnings. So again, we know that. We know, let's strip away all of those stock specific elements. Let's strip away all of that. We know that if I was simply to buy and hold, let's say for example, the S&P 500 or a global ETF, and if I was to do that, I would probably outperform bonds or cash over time. It depends on the time, of course. But if I was to apply a market timing indicator and I was to go in when the market is rising and then I was to go out when the market is falling, and I don't have to get that right all the time, I will outperform bonds and cash, right? So we know the basics, the fundamental basics of how the market works. And why is that? Why is it that we know that if I was to buy, let's say, high dividend, solid and growing dividend stocks, how is it that if I was to buy low PE ratio stocks, how is it if I was simply to buy and hold the market, or else buy and hold the market and get in and out in a market timing, why is it that I would outperform over bonds and cash? The answer is because I'm taking more risk. I'm taking more risks because stocks rise and they fall, in contrast to stocks and cash, or in contrast to bonds and cash. So therefore, I have to be, as a stock investor, I have to be compensated for taking more risk. Simply, that's the way in which the market works. Now, I was trained in that way. However, the thing is that over time, we have now learned that actually, if I not just do that, but if I also take a look at the way in which companies or the market is running from a sustainability point of view, it won't hurt my return. We used to think it did. We used to think, okay, well, you can be, an impact investor or somebody who looks at sustainability from an investing point of view, or you can look at someone from a returns point of view. That is no longer. We now know that if you put the two together, they can be at least as good. So if I invest today, where I also keep an eye on the sustainability of those companies, I'm likely to do at least as well, if not better. And, people used to say, why? Like, how could that be the case? Because after all, if a stock is doing good in the world, it must be costing it money to do so. Well, that was where the whole introduction of ESG came in. ESG gave me a way to measure how stocks were doing good. So, and what was that good? So then ESG looks at environment, social and governance, right? So E is for environment. If a company, let's say, is managing its carbon footprint, let's say if it's looking at its emissions, let's say if it's looking to make sure that it's got a sustainable supply chain, all those sorts of things. So that's E. S is how well it's treating its staff and how well it's treating its community. So let's say that it treats its staff well, it pays them fairly, it gives back to the community, it supports maybe underrepresented communities to reach their potential and subsequently work in the company or give them other opportunities. That's S. And then G is how well the company is run. Actually, how well is it run itself as a business? And from the point of view that you've got managers, you've got stakeholders and how they interact together. So an example of a company that will have a good G, good governance, is one in where the compensation of the staff is decided by people other than the staff themselves, including senior management. But then what started to happen was then people said, but actually, if a company treats its staff well, it's actually likely to have lower turnover. And if a company really looks at its supply chain and makes sure that it's sustainable, the likelihood is that it probably has better relationships with its suppliers. And actually, if a company is run well from a G of the ESG point of view, isn't that likely to reward shareholders? And the answer is yes. So as a result of that, sustainability of a company is of course important to the world, to the environment, to the community, etc. It's actually also important for investors. And that was the basis of the ESG and Tech Show. And that is how I'm here with you today. But every single month we focus on one element of that. So over the past year, and a little bit more now, we have focused on 3D printing. We have focused on the future of public transport. We have focused on SPACs. We have focused on inflation. We have focused on the fastest growing ETFs in these spaces. We have focused on a range of different things. So what this show is designed to do is to give you an update from an investor's point of view in those two big mega trends of this decade, so that you can A, become more informed about them, and B, specifically through the nuance of an investor's eyes. So today what we're going to do is focus on FinTech. Okay, so FinTech is financial technology. Now, let's just pop them there into the chat. Let me just hear from you right now. What FinTech do you use on a regular basis? I won't say a daily basis, a regular basis. So tell me, what FinTechs, what pieces of financial technology do you use? Let me take a look over here. Rodney says, hello from Reno, Nevada. Hello, and how are you? Hope I'm staying cool. Do my best here, Rodney. Doing my best. But you know what? The warm weather is welcome. Welcome. So let me hear from you. What FinTech do you use? Now, there is one that is so super obvious, but we'll just see if anybody gets it, right? And when I say obvious, I mean not obvious, just obvious. So let's just see if you get that, okay? So let's just hear from people here. What FinTech do you use on a regular basis? So Herman starts off here with the iPhone. Yeah, I mean, the iPhone is a way. I have an iPhone too, and I use my iPhone now for my payments. Probably in the past 6, 7, 8, 9, 10 months, I've been using my phone almost exclusively. Like my card at this stage, I don't really use it anymore. Certainly. Alton says 3D printers. Interesting. So 3D printers, how would you use a 3D printer from a financial technology point of view? Yeah, I'd love to hear you elaborate on that there, Alton. And Monsieur Fonseca, sorry, I'm saying that with a French accent, despite the fact, of course, you said you're joining us from Portugal, has said banking. Absolutely. Like if you think about financial technology, I can log in here into my online banking. I can put in, let's say, your IBAN there in Portugal. I can transfer money across. No need for me to go to the bank. Certainly no need for me to fill out any paper. Anybody else? Have we got anything else there? And the reason I'm smiling is because guess what? No problem, Alton. No problem at all. Guess what? Because we did have a show on 3D printing. Can I show you a piece of FinTech? The Vectorvest System. The Vectorvest System is, of course, combining finance and technology, because this is a way in which we can analyze stocks, and as you can see here, in real time. So Vectorvest is, of course, an example of a financial technology. Now, just a couple of other ones, and I'm going to take you through my watch list for today. I want to take you through some stocks here and that we're going to take a look at right throughout the episode. So, just to give you some ideas, a couple of ones that you've already mentioned there are, of course, cashless banking or cashless payments. Also peer-to-peer finance as well, where we can crowdsource from a funding point of view, peer-to-peer borrowing, peer-to-peer investing, all those various different elements as well. They're all examples of fintech. And of course, we also have blockchain. And last month or the month before we had one particular episode totally and utterly dedicated to blockchain as well, just to do a deep dive on it, because it's an area that's growing all the time. What else have we got over here? We have, yes, of course, we have e-trading. Yeah, that's another example. I don't know, does anyone remember the days when you'd have to pick up the phone and you would actually have to call somebody to actually put through a trade, put through a transaction and pay a fortune for it? Do you remember when we used to have to do that? Also, do you know what I remember? I remember when there wasn't any way in which you could transfer money into an international broker. Probably a lot of you who are joining me from the US or Canada don't have to do that now, but certainly as an Irish account holder, let's say, and my first online account was in the UK, I couldn't just log onto my internet banking and then transfer money across into an international account. I had to physically walk in, fill out this piece of paper saying that I wanted to transfer X amount across to my trading account. Now David, so E-Trade Robinhood N26, thank you indeed. David says 6G is coming out soon. That'll be interesting to watch. Trading, yep. So why is the S&P 500 rallying today? Let's come back to that. Bitcoin, another, yeah, and sorry, there's various different cryptocurrencies. Yeah, that's another one. Now cryptocurrencies, digital assets, NFTs, non-fungible tokens, all of those are an example of a digital asset, and specifically a digital financial asset there as well. So you're absolutely right, and keep them coming, right? Keep your suggestions coming, because what I'm now going to do is I'm going to start off here, I'm going to take you through my list of stocks. Then what I'm going to do is I'm going to take you through how to look at fintech from the point of view of what drives it, like what drives the growth of the companies that are in this sector. And then I'm going to talk to you about the technologies that are driving the sector. And then we're going to come back over here. I'm pointing over there. We're going to come back over here then to my watch list, and we're going to take a look, because there's a couple of really significant factors that I think stand out to me, some very, very significant trends. Before I get into this, and I just want to talk you through what is up here on my watch list, is there any trends that you see in fintech today? Any particular trends you see? I see, for example, like a trend is of course growth, right? There's lots more people are using fintech tools. Lots more people are now, of course, they're paying on their watches. I see that there's a lot of growth in the area. I see that now we're automating a lot of tech processes as well. Like now we hear of InsurTech, RegTech. There's much more talk, a lot more talk about blockchain. I'm not quite seeing the blockchain becoming mainstream yet for broad-based businesses. I think that will change, as I mentioned in that episode. But I'd just like to hear from you. Of course, a lot more conversation about crypto. That can often be more of a trading element as opposed to investing. But anything else? Any major? Because there's one key trend that stands out a mile to me anyway on this watch list. So just interested to see if you've been spotting anything. Now, while you're letting me know there in the chat for any thoughts that you might be having in this area, I'm just going to show you the watch list that I've put together for you today. Now, first of all, this is ranked in terms of value, safety, and timing. Okay, so this is, for any of you who are familiar with Vectorvest, you will know that the minute you log into your software, you log into the program, and you create a watch list, automatically it will be ranked in terms of value, safety, and timing. I can, of course, change that, but just to explain to you that what I am looking at here is a list of stocks and ETFs. I got both for you in the area of fintech that is looking at value, safety, and timing. What are value, safety, and timing? Well, value is long-term price appreciation potential. Long-term price appreciation potential. What is the potential of the stock or ETF to grow in the next 1 to 5 years? 1 to 3 years, sorry. And above one is favourable, below one is unfavourable. Second one, what is safety? What is the S of VST? The S refers to consistency and predictability of financial performance. How likely is it that this particular stock or ETF, how likely is it that it will generate earnings and dividends quarter over quarter, year over year, that are consistent and predictable? And then T is for timing. So V and S are fundamental, whereas T is for timing. T looks at the direction of the stock or ETF, the magnitude of that direction. So where exactly are buyers pushing up sellers, or is it going the opposite way around? And what are the dynamics of that? Is it volatile or is it pretty smooth? So T is technical, V and S are fundamental. Put the whole lot together, put together V and S and T, put the whole lot together in a lovely bow, and then you have got an indicator that is reflective of value, safety and timing. Above 1 is favourable, below 1 is unfavourable. Now, look over here, what's been going on is a couple of key trends that I'm spotting over here, right? Number 1 is that it's actually quite difficult for me to find you fintech stocks that are where the VST is above 1. Now, look, it's 2022. 2022 thus far, from January to July, has not been easy for the stock market, and certainly has not been easy for tech stocks. So for all those reasons, that's not easy to do anyway. Okay, so let's just put that on the table. That's not to say I couldn't. That's not to say I couldn't though. So as I look here, I found one stock, and you might be surprised. You say, sorry Susan, you've got Goldman Sachs. You've got Goldman Sachs in here as fintech. Isn't that one of the oldest kids in the block? Yes, but stick with me. And then also one of the ARC ETFs, the ARC Fintech ETF as well. That is above 1 from the point of view of value, safety and timing as well. Now, I'm also going to show you another metric a little bit later on. I'm going to show you a range of things. I'm going to show you how exactly to look at this watch list. But before I move on, are there any stocks you want me to add? Are there any stocks that you would like for me to add in here? Let me, while you're figuring that out, any stocks you would like for me to add into this watch list, let me know and I would pop them in here. We'll add them into our analysis. But let me just walk you through what I've got going on up here, right? So Goldman Sachs, when I say it's the first one, it is in terms of VST. It's not in terms of the order that I picked. This is value, safety and timing is winning out here. I've got one of Kathy Wood's ARC ETFs, then we have the ARC Fintech ETF. Now, then I have the Globalx Fintech ETF. Thank you, Alton. I'm going to add that in there now in a moment. And again, to everybody else, any fintech stocks you'd like for me to add, I will just say this watch list is in the US. So just if you could just make sure that they're in the US so that I can add them in here. All I did to find some fintech ETFs was this. I typed in fintech and I added all the ETFs in there. That's just what I did. Okay, so some of them are quite new, some of them are quite unfamiliar, but that's all I did, right? I just searched up here in the search bar. You know what I should do? Do you know what I should do? I should go back one step. Let me go back here and show you how I got to here in the first place. So let me go to my homepage. As you log in to the program, sorry, and just actually at this stage, I am just going to say to the team in the US, if you could maybe just put the trial link there into the chat, please. Anybody that doesn't have access to the software, please do use the link that's going to be in the chat there in a moment. Please do go ahead and try out Vectorvest, and you can do everything that I'm showing you within the next 30 days if you go ahead and take a trial. For all the rest of you, of course, you can go ahead and do what I'm showing you right now. Okay, so I'm going to pop on over here now, right? So I'm going to go in here to viewer, and when I go into viewer, this is what you're going to see. Any of you that is going to follow me, this is what you're going to see. You're going to see Vectorvest viewers. Now, then I go to stock viewer. Sorry, I don't want to go to watch list viewer. And in here, in my watch list viewer, I could have simply created a watch list. Now I didn't. What I did was I went directly over here to this new watch list icon. Same thing. Thanks guys. I just see there the trial link has just been put into the chat there. And it's also been pinned as well. So anybody that can't follow me now, obviously this is being live streamed and thus live streamed onto YouTube, and thus again you'll be able to see this afterwards, but when you take a trial you'll be able to do everything that I'm going to show you today. So I'm over here, I click new, and then I need to select where I'm putting my watch list. That bit is important. So for me, I'm going to add it in here into ES. I created my own folder here called ESG and Tech. By the way, I'm loving all of the suggestions that are in here. Alton has come back, Francisco has come back, Andrea and Mansour Fonseca has all come back with suggestions. They're all going to be appearing on the screen very shortly. Any more, pop them in. We'll analyze them all together. That's what we can do. That's what we're here. Okay, so I created a new folder. Okay, a new group. That group, ages and ages ago, and it's for my ESG and Tech show. And in here, then what I did was I created a new watch list, and I called this FinTech. And then when I did that, based on the research that I've done in advance of this show, then what I did was that I added in all of my symbols. So I'm now going to pretend that I have zero stocks up here, and instead what I'm now going to do is create a watch list where I'm just going to add in the stocks that you're all putting in here. Okay, Alton says PSFE. Now in here, up here at the top, I can type in that symbol PSFE and see if it's here. Is it in Vectorvest? Yes, it is. Now, what if it's not? What if it's not in Vectorvest? What if I type in the ticker code correctly and the stock isn't here? Simply send us an email and say, will you please add in, for example, in this case, PaySafe to your database, and we'll take care of it from there. Now, the minute I did that, look what's happened, right? Is that one of my stocks has disappeared. Have I done something wrong? No. You see, you get to know this software pretty well after a while. Now, here's what we need to do about that. Is what happened is I've now typed in my 11th stock and it will only show the top 10. So I'm going to change this to where we can see all, and then we'll be able to see them all. Okay, what else have we got here? Francisco, where are you joining us from, Francisco? I don't think I caught that so far. Francisco says SPYG. And okay, this is the S&P 500 growth. Okay, this is an ETF focusing on growth. Okay, interesting. So yeah, we'll add that in there. Now, Andrea says 4, F-O-U-R, 4, shift for payments. Okay. What else have we got going on here? We've got Shopify. Okay, S-H-O-P. That's Shopify. What else? Monsieur Fonseca says here, Lightspeed. Now, as you can also see here, I'm typing in this time the name of a company as distinct to a ticker code. No problem, the system can handle it. L-I-G-H-T, speed, com. I'm just going to check there. Is that what you were looking for? Oh, hello, Francisco is joining us from the USA. You're very welcome indeed. And then David also says F-F-I-E. Faraday Future. All right. Now, that's everything. That is everything that everybody has asked for, unless you tell me more. That's where I'm at. We have 16 stocks, right? So the stocks that I had done my research on earlier, they're all there. And then also, as you can see down here, then I also have a range of the others. So now, let me take you on a guided tour of our watch list. So we've got Goldman Sachs, company, of course, familiar to many of you, really big, relatively old company, in fact. We have, interestingly up here, by the way, we're still ranking this in terms of value, safety and timing. That's important. We still have the combination of value, long-term price appreciation potential, safety, consistency and predictability of financial performance, and then timing, which is the direction, magnitude of that direction, as well as the dynamics of that direction. Above one is favourable, below one is unfavourable. So far I have 3 stocks, Goldman Sachs, the S&P 500 Growth and ARC Fintech. They are my 3 stocks at the moment, where the VST is above 1. That's not to say that it's not worthwhile looking at the others, but just to point that out. Now, what else have we got here? We've got Globalx Fintech. I showed you how I found that. This is an interesting one to watch for a variety of reasons. So, Merca de Libre is basically the Amazon of South America. Very fast-growing company. But I do want to point out one thing, is that look at the price versus the value. Look at the price versus the value. $760 a share that it's trading at. Its value is at $171 a share. Its PE ratio is at 81 times. It is except for another one, it is almost by far well ahead of some of the others that we've got going on here. So just wanted to point that out to you. Very, very interesting stock, and it's also up 5% today. You know, so quite a volatile stock, and like quite quickly growing as well here, despite the fact that it is, as according to Vectorvest, quite overvalued. It's actually got quite significant long-term price appreciation potential as well. So I thought it might be interesting to discuss it with you today. PayPal, of course, again, many of you will be familiar with it. I've used PayPal for 2 reasons. I've used PayPal to pay people and companies and businesses, but I've also used PayPal to collect payments online as well. I'm not familiar with Lightspeed, so thank you very much to Monsieur Fonseca for sharing that stock with us. Just because I'm not familiar with a stock doesn't mean I'm not familiar with a stock. In other words, just because I don't recognize the company, that doesn't have to last that long. Because if I right click and I view the full stock analysis report, what I can see here is that I can see that Lightspeed Commerce Inc. provides point of sale software for retailers and restaurants. So that means that when I'm paying, that's what point of sale is, when I'm actually paying, handing over the money. For retailers and restaurants, this is the company that offers workflow analysis, training, configuration, networking, and business services. That is an interesting one. And I can go on from here and I can see what's going on with that company. That is, okay, so that's interesting there for us to take a look at. 4, who suggested 4? Andrea put 4 on the table here. So 4 is Shift Payments, Shift for Payments. Again, I can right click, view full stock analysis report. And what can I see here is going on with this company? Shift for Payments is an independent provider of payment acceptance and payment processing solutions in the US based on total volume of payments processed. It operates through payments platform, technology solutions, and partner-centric distributions. Okay, thank you very much indeed for that one. Up Fintech. Now this is one I'm actually not familiar with this company. Again, I just got it because I typed in Fintech and this is where I found it. So I said I'd take a look and let's see if it's interesting. Now Block, of course, many of you again will be familiar with Block. It's a quite well-known fintech company now at this stage. Fintech Acquisition. This again was one that I simply came across as I searched for fintech, and what this is it is basically, as I thought it was, a SPAC. It's operating as a blank check company. I would question a couple of things about it now, but still worthwhile to discuss here with us today. Shopify, of course, a lot of you will be familiar with Shopify. That has become a household name right across, particularly the US, but right across the world. Lexin Fintech, PaySafe is another one that some people have suggested. Upstart Holding is one that I came across in my own research, and also Faraday Future down here as well. Okay, so as you can see here, we've quite an array of stocks. And what I want to do is I'm going to briefly take you through the 2 key metrics that drive fintech. There's 2 of them. There's 2 key metrics that drive fintech. One of them, if you were to be here with me a couple of weeks ago, we may not have been as positive about it as we are today. The other one has been extremely positive since the pandemic. I'm sure you can probably guess what they both are. But let me take you over now. Let me take you over here to my other screen. Let's take a look at the 2 key things that drive fintech so that you're aware of what could be potentially driving in both of these cases. Right, let me move over here. Right, here we are. So I think that this is an interesting statistic here. This web page, one of the elements, the key drivers of fintech is, of course, consumer spending, because an awful lot of fintech is to do with payments and transactions. So, of course, the more we spend, well then, the more that we need to pay using these payment apps. And if there is a transaction-based fee for these, which there often is, well then the more we spend, the more these companies collect. Okay, so if I take a look up here, I'm going to show you that every year we buy stuff worth $44 trillion, or $1.4 million per second, and about 60% of the world economy is made up of stuff that people buy every day, which is called private consumer spending. Now that's not including, of course, business spending. So if I was to go out for lunch today because I am hungry and I am an individual, and I spend 20 euro on my lunch, then that is private spending. If I meet Joey today for coffee, right, so who is keep taking care of everything in the background of the show, we might just everyone give a shout out to Joey because he is totes mazeballs. So if I am going to meet Joey today and we're going to go out for lunch and I'm going to say, look, Joey, you do a super job producing the show every single episode, and I know Glenn thinks the same, and I know everybody who works in Vectorvest thinks the same, and we'd just like to take you out for lunch to say thank you, and we spend $50 on that. That is not included in private consumer spending. That is then business spending. So even the number I'm showing you is less than reality what is spent in places that you might consider. Is there nobody saying hello to Joey? Come on, we can't be letting him think that no one is thinking of him. So send it in there to the chat. Just give him a shout out. Okay, and every day we spend 1.4 million per second. I just thought actually just look while we're here. Let's just take a quick look at what are the most popular consumer goods in history. Coca-Cola is number 1. I just don't get that. I personally, I'm not a drinker of Coca-Cola. I don't like it. But Lay's chips, Sony PlayStation, yeah, my brother had that. The iPad, I had one of them once upon a time. Star Wars tickets, the Toyota Corolla, I started to drive in the Toyota Corolla. The Angry Birds game, Rubik's Cube, my husband's cousin was one of the best people ever to be able to make that in really quickly. Michael Jackson's Thriller album, that's where my husband learned to dance, and Harry Potter books. I grew up, living across the road from a girl who stayed up all night reading Harry Potter every time that J.K. Rowling released a book. So we certainly know that. Thanks, Andrea, for saying hi, Joey. And Joey himself here is saying, lol, thank you. You deserve it, Joey. Thanks, Alton, as well. Joey is producer of the year. Delighted to hear it. Now, also, let me show you the largest consumer goods companies, right? This is who they are. Big, big, big names. I'm familiar with all of them, except number 5. I wouldn't be as familiar with the Brazilian meat processing company. Nestle, I know. Procter & Gamble, PepsiCo, Unilever, Coca-Cola, AB InBev, Tyson Foods, Mondelez, L'Oreal. I know them all, except I wouldn't be as familiar there with the Brazilian meat producing company. But certainly all of the others I'd be familiar with. So that is one of the key drivers. Now, I didn't just want to show you these statistics and then just say, okay, so this is what's going on, because showing you what happens every second doesn't show you growth. What I also wanted to show you was this is what now I got this from the US. Oh, the US Department of Commerce. That's where I got this. I got the customer spending report from the US Department of Commerce. So in the US, this is what I was saying to you, is about a month ago, I would have been much less happy about what we're seeing here. But in May 2022, which is the most recent full set of data that has been released in the US, personal income increased by 0.5%, disposable personal income increased by 0.5%, and personal consumer expenditures increased by 0.2%, and that is right across the board. There was no change in January 2022. It did grow again in February and March, and as you can see here now in April and May, it has as well, by 0.5% in each case. And you can look down through the various numbers there. But this data is recently out, and it's actually pointing out that people have, we're starting to see, those wage increases to reflect growing inflation. That is now happening. Of course, there is larger employment as well now in the US particularly, and that generally when we've got a really big demand for labour, which we do, and it's being met with a relatively limited supply of labour, which we do, then wages have to rise as well to compensate or to become more competitive. So that is our first driver, is basically consumption spending. Is the more we spend, the more fintech companies are going to get, and of course the more we spend is driven by something else, which is what we're earning and how confident we are to spend, right? So that is step 1. Step 2 is, of course, where we're spending it. Because if I walk into a shop and I'm going to hand over $50, by the way, I'm going to the US next week, super duper excited. But if I go to the US next week and I hand over $50 as I buy my, one of the things I love about the States is the way they put creamer in their coffee. Oh, love it. L-U-V it. I love going into a coffee shop and then they say I can get half and half. Oh, love it. So I'm going to go in, sorry, back to my story, got off track there. And I hand over, let's say, $10 because now I'm going to meet someone in Vectorvest for coffee, hand over $10. For that I get 2 coffees. If I do that, of course, a fintech company, unless they're some sort of back-end or payroll company, etc., they're not going to get any benefit of that. So, as I'm sure you can imagine, the second key thing that I want to show you here is the growth of digital payments, because this is the other fundamental driver of fintech. So, here we go. The total transaction value in the digital payments segment is projected to reach 8.49 trillion in 2022. That's a lot of dollars. That is a lot of dollars. The total transaction value is expected to show an annual growth rate of 12.82%, resulting in projected total amount of 13.75 trillion in 2026. The largest segment is digital commerce, no surprise there. And from a global comparison, it shows the highest accumulated transaction value is reached in China. Now, I've been watching this for a while. I've been watching payments for a while. And China, a couple of years ago, was the first ever country where m-commerce overtook e-commerce. Sometimes we use e-commerce as a catch-all term. Now, if I was to pay for something, which I did, I was out always before the show, I sit down and I really think through everything that I'm going to talk to you about, and I research get my stocks ready, all that sort of thing. And I went out for lunch beforehand with my thinking coffee, and I paid with my phone. That's not e-commerce, that's m-commerce. If I sat here and I bought tickets to Garth Brooks, which I'm going to go to in September, and I actually booked these online on my laptop, that's e-commerce. M-commerce overtook e-commerce for it was the first country ever to do it, was China. So China has always been, not always, specifically the last 15 years, has been more focused on growing digital commerce more than any other country in the world. Now, the other thing that I wanted to show you here, of course, is e-commerce specifically. So when it comes to e-commerce, we're seeing, of course, massive growth. And of course, this was given a huge boost in the pandemic as well, whereas 2020, we can see that e-commerce went from 3.3 billion up to 4.2 billion. And in 2021, retail e-commerce sales amounted to $4.9 trillion, and that is forecast to grow by 50% over the next 4 years, reaching about 7.4 trillion in 2025. So is there scope for growth in fintech? Absolutely. So you might say to me, right, so Susan, wonderful. Does that mean we should go back to your watch list and buy everything that's on it? Well, no, because what I'm talking to you about here is all relating to statistics focusing on the economy and on consumer spending, which is driven by personal consumers' wages, and also then by the decisions that people make about how they actually spend their money. So there's massive growth in it. That's not to say any company is profitable. That's not to say that the companies involved in this space will continue to be there. And of course, more than anything, that's not to say that they're investable. So let's pop on over here. Okay, let me bring you back over here then. And let's go through what we want to look at over here. Let me take you through the trends now from an investing point of view. So now that we have a range of ETFs, and we also have a range of stocks here, some bigger than others. And let's now figure out what it is that you want. So back to the chat, because I need to tailor today totally to what it is that you're looking for. So just tell me in the chat, what do you look for in a stock? Now, I'll tell you what I look for, right? I'll get the ball rolling, but what do you look for in a stock? What do you want? What do you want me to show you? Do you want the stocks that are fast growing? Do you want the stocks that are profitable? Do you want the stocks that are undervalued? Do you want the stocks with higher dividends? Do you want the stocks with sustainable dividends? You tell me what you're looking for and I'll show you. While you're thinking about what it is that you want, I will start showing you. One of the things that really stood out to me about this, right, that really stands out to me about this list is that some of these PE ratios are shocking. They're absolutely shocking. So if I was to look here and I solely take a look over here at my PE ratios, I can see the SPAC here is at 110. I can see Mercado Libre is at 81. I can see Shopify is at 66. I can see Block is at 49. Like, wow, right? Now, let me see, who's this? Alton says growth year on year. Can I ask growth of what? Alton, do you mean earnings? Values, you say, and safe. Could you just elaborate a little bit more there, Alton, and I'll find all that for you. Now, I am not the type of character that is comfortable investing in stocks with a P ratio above 60, right? I'm just not there, you know? I'm just not there. So let me show you how, in a couple of clicks, how I could remove those stocks, not from this watch list, but from a specific view. Alton says earnings, great. What I'm going to now do is I'm going to pop on over here to Unisearch. My parameter is that I just want to filter by the stocks that are in this watch list. So I want only the stocks that are in this watch list. Fintech, okay. Run the search. There we are, thanking you. Now, again, I can only see my top 10. I want to see them all. Well, I do for the moment anyway. But I only want to see in this, I only want to see the PE ratio is less than 60. 60. Run search. There you go. And I can see them all. So now I can actually see the stocks. Where I have my Goldman Sachs, my PayPal, my Lightspeed, all of those. Now I do want to point out that I can still go back to my watch list and I can see everything. Because things may change. Things, of course, may change. And if I want to see, well, you know, maybe I'm not comfortable buying those stocks, but I still want to keep a watch on them, I can do that. Now, what else do I want? Well, I'm really not comfortable, ladies and gentlemen. I'm really not comfortable buying a stock that has a sell recommendation. Okay, again, that for me is no go. So what I'm now going to do is but I still want to keep an eye though. I still want to keep an eye on these stocks. What I'm going to do is pop back over here, and I'm also going to remove that. So I'm going to say the REC is not equal to sell. And okay. Now let's go again. Okay. Now we are down to 2, 4, 6, 7 stocks. Okay. Now we're down to 7 stocks. Right. Now Jim has chimed in here. Jim wants the RS and the RT to be greater than 1. He wants rising earnings and above. And he also wants the DMI oscillator to be above 0. Okay. Interesting, Jim. Interesting. Right. Let me pop back over here to my watch list. I just want to show you a couple of other trends before we get to that. As I scroll over here, I see, of course, there's a couple of stocks here that don't have any EPS. They don't have any earnings per share. Does this mean these companies aren't making money? No. What it means is these companies are not potentially stocks. They may instead be ETFs, and that's the way that I can see that over there. So I just wanted to point that out to you. Shopify's volume was up 77% in yesterday. Wonder why that might be. Now, as you can see, Mercado Libre up 5.3, Shopify's up 8. Okay, Shopify's up over 8% today. What's going on there? Now, I would like to know what's going on. And is it on my list? Well, the P ratio is actually over 60, so it's not. And this is why I'm saying there's a difference between what I want to see what's going on and what I may be interested in investing, what might be suitable for me. I want to see what is going on with Shopify. Why is it up 8% today? Now I see Lightspeed is up 8% and I see Upstart is up 9%. Here's what I'm going to do. I'm going to right click on Shopify and I'm going to look at stock news. And then what's going to happen is, over here, I'm going to take a look and see. Get the news. Here we go. This is why Shopify is partnering with YouTube to shore up sales from content creators. So we're here streaming on YouTube talking about Shopify, who's partnering with YouTube. That's what's going on. Investors heavily search Shopify. Here's what you need to know. There we go. That is what is going on there now with Shopify. What else is happening here? 9.19%. What's going on with Upstart? Right click, view stock news. Okay. Financial Partners Credit Union selects Upstart for personal lending. Let me see now. Growth stock. Okay. Right, it looks to be that is the main thing. Now I'd have to go in. Zacks.com has been looking at this. He went into those facts. Shares this company have returned minus 26%. We prioritize essentially look. Upstart's expected post earnings of 28 cents per share for quarter, representing year-over-year change of minus 54.8. But over the last 30 days, the Sachs consensus has changed by minus 7.4. Okay. I'm not quite sure what that's going on there now. It's not quite telling me as much as I thought that I might learn from it there. But that is the way in which it's a buy. And that is the way in which to check those out. Again, that's not a stock that is making it onto my Unisearch because it's got a sell recommendation. That's not to say that it doesn't suit you, but personally, that's not where I'm at. Also, I definitely want to see a stock that has growing earnings. If I'm not seeing a stock with growing earnings, I'm not happy. And Alton, it sounds like you're the same. So if I take a look here, I basically want to see the GRT being positive. GRT greater than 0. Okay, and now let's run the search. Now we're down to 5 stocks here. So we've got Block, we've got Up Fintech Holding, we've got Lightspeed. Lightspeed is still making the grade, PayPal and Goldman Sachs. Okay, so lots for us to think about there, which I will. come back to. Let me just pop back over here then to my stock viewer. Let's see what else we want to observe. Now, there's something else I do want to point out to you, right? And again, this is a key trend for me that, again, like I say, it's 2022. There's nothing out of the ordinary in what I'm about to show you because of what's been happening this year and all that has been going on. But I do want to point out one thing to you, and that is look at the CI. The CI it's an indicator that I look at all the time, and the CI is the comfort index. Now, for any of you who's not familiar with the CI, right click on any stock, look at view full stock analysis report, scroll down then to the comfort index, and here you'll see what it is. It's a stock's ability to resist severe and or lengthy price declines. So it's an ability for the stock to be resilient. That's what it is. Now, CI is something, as I say, that I look at all the time. Above one is favourable, below one is unfavourable. But there isn't a single stock in this list, not a single one that is above 1. In fact, there's not a single stock that's above 0.7, and it's down as far as 0.13. In fact, if I was to look at the average of this watch list is just 0.34. And this is telling me that if we were to look at all of these stocks in aggregate, is that these stocks have had a tough year. Again, look, we know that. We knew that already. But while today is live at now 16:51 here live from Dublin, people who are watching this may be watching this at a time when the CI is not like this, when the CI will be better. So it's important that I don't avoid talking about this topic, because I want to make sure that if you're looking at this anytime in the future, that you see that this is something that is of interest to look at. So what I'm going to do here is I'm going to take a look at Goldman Sachs. Okay, let's take a look at, before I do that, because I do want to take a look at Goldman Sachs, I want to do one other thing. I want to look at one other element, because another observation that I made is that look how in many cases the stocks here the price is higher than the value, right? Let's not look at Goldman Sachs for a moment, but let's look at, for example, again, I've already mentioned this for Mercado Libre, but look, okay, shift for payments, $35 versus 18, Block 74 versus 28, Lightspeed is almost fairly valued. Faraday, €5 or $5.24 versus 115. Shopify, $37 versus 652. Like these are big differences. PayPal, 79 versus 45. Up 416 versus 276. Lexin Fintech, 220. Okay, that one is slightly undervalued. Upstart, 31 versus 30, quite fairly valued. And 2 versus 320. So from a prevailing point of view, if we were to look at the average, now you can't see it because I'm in the way, so let me move out of the way. There we are. If you were to look at the average price is 89, the average value is 43. So again, that is telling me that something we need to watch out for here is to make sure that price is not ridiculous in comparison to value. So that's also something that I want to see over here in my Unisearch. I want to see my price. I'll go over here to my Vectorvest fields, and P is for price. My price. Now I had this ready for you. I just didn't want to just pop it up so that you'd think that it was there all along. Okay, we'll do it this way. Value versus price, right? Value divided by price. I want that to be at least above 1. In other words, I want the value to be higher than the price. And no results found. So I've gone too far. I'm not going to be in a position to be able to get all of these things together. I've gone too far. And that is because if I delete this parameter now, and we'll run the search again, that is because all of the stocks that are now left on my list is in a position of where the value is greater than the price. Yeah, and Goldman Sachs is the same. Yeah, in fact, all of the stocks that are left here. Okay, if I go any further, I won't have any stocks to buy. And there's nothing necessarily wrong with that at the moment, right? There's nothing, if I don't have stocks to buy, well then I don't have stocks to buy. There's nothing necessarily wrong. But this was the other thing that I would have wanted to see, and I would have also liked to see my CI above 1. If I put in both of those, I won't get anything, right? And let me just put them back in just so you can see that. That's not to say that, that I need to compromise. It just means that that's kind of the way things are at the moment. Sometimes doing nothing is an action. It's a decision. V is for value divided fees for value divided by price. I want this to be above 1. And personally, I also want to see the CI above 1 as well. If I do that, I will not find stocks. But that is okay. CI above 1 as well. It's always good to have this. Custom value is 1. Okay. Now, there we are. I'm going to run that search. And as we know, I'm not going to find anything. That's fine. That's fine for a day like today. But let me pop back over here now, back to my viewer. I would have liked to see one more thing as well regarding a dividend, but let's not go crazy. Right, over here now, if I come back over here, I do want to take a look at Goldman Sachs. I do want to take a look at that stock for this reason, is that Goldman Sachs is an example of a big investment bank, right? It's a company with massive distribution, massive brand, obviously, huge customers. Its earnings per share is $40 a share, like $40 an actual share. Very significant. It's a massive company. And a lot of people would say, right, yeah, but that's not a fintech company because it's not, it's not small, it's not nimble. Okay, fair enough. But it's also got a lot of reserves to handle what it is doing. So for that reason, as we finish up today's episode, I would like to go through this and analyze it for you, right? So let's go through the graph here and let's take a look and analyze it for you. Now, Jim, I'm going to go back to you here. RS, you wanted the RS to be above 1, which it is. You wanted the RT to be above 1, which it is. You wanted rising earnings, which it is. Now, the oscillators, etc., I won't have a chance to get into technical analysis on this. But from a fundamental point of view, just as somebody who did put forward some ideas there of what to consider against, they're here. And this is the only stock, and I wanted to make sure that I had a buy recommendation here for you. This is the only stock that has a buy recommendation as per the parameters that Vectorvest has in place for what a buy recommendation needs to have. So what I'm going to do is I'm going to graph this. Okay, so we can see here that Goldman Sachs has been on a downturn, but let me look into the last 3 months. Let's just see what's going on here. Now that line is extremely difficult, I know, for you to see, so I'm going to fix that for you. I'm going to make it thicker. I'm going to change the style, and I'm going to make it much thicker so that you can see that. Okay, now there we are, better. Okay, so here, as you can see, the RT of Goldman Sachs has gone from 0.79 on the 14th of July, which was last Thursday. Last Thursday, and now it's all the way up as far as 1.24. That's a really bullish sign from either a trading point of view or an entry point of view if you want to get into the stock from the point of view of investment. Now, in addition over here, I can see that the stop loss, it has now bounced off the stop loss. Goldman Sachs was a sell recommendation back as far as the 16th of June. Then it has become a hold recommendation and has only turned the corner on the 19th of July, which was a Monday. So it wasn't Monday, it was Tuesday. So as you can see here, on this date, it has now bounced off $281 a share up to $319 a share. So as you can see here, there's been a very, very significant bounce here. The PE ratio of Goldman Sachs is now at, it's saying now at 7.82. It's not that I disbelieve it, but the earnings yield. I could see that in the corner of my eye there earlier on, and I just wanted to check that. So the PE ratio is the lowest here by a mile of any of the others, right? So we're looking at generally a low cost of earnings. It's at $7.82 per dollar of earnings. So that there, as you can see, is quite from a fundamental point of view. Dividend yield point of view, very healthy. Dividend yield here as well of 2.5%, rare enough you see that. But what I will say about Goldman Sachs is that it is much more of a defensive stock as distinct to a cyclical one. So as we're looking at things changing an awful lot in terms of fears of recession, going back to that idea there all around consumer earnings, etc. For all of those reasons, this stock is actually likely to have much less fears and concerns around it than others might have, and certainly an awful lot less of that volatility. And from a value, safety and timing point of view, it too is above 1. Okay, one last thing I'm going to show you is I'm going to take off some things here that I just want to put up the earnings per share. Okay, last thing I'm going to do for you here. The last thing I'm going to do for you is this. I am going to change the style to make sure that each of these are stronger so you can see them. And I literally have seconds to go before the episode is over, so I better make sure I do this very quickly. PE ratio here. So we are going to change the style. I'm going to change the style here again to solid. Okay. So just want to point out here to you. So I see that the RT is rising. I see over here that the PE ratio is rising. Now there is a concern here, all right, about the earnings. The earnings have been falling there since May, but this was when the stock was back at $319 a share, $320 a share. This has been, it looks like there, it's been driven out by the market. It looks like Goldman Sachs is now on its way back up. And now that's based on what I see right here and right now. So as I'm analysing the stock right now, it's the only one with the buy recommendation, 2.5% of a dividend yield. It's got an earnings per share that looks like it's slightly rising. The RT is now back in positive territory. So this is the one that I wanted to show you from a graph point of view. From a fundamental point of view, this is the one that is worth extra consideration and analysis while I was here with you today. Okay, so at exactly 5 o'clock here on the dot in Ireland, and wherever you are, wherever you might be, thank you so much indeed for joining us. I'm delighted to be the presenter of the show. Please, 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 if you enjoyed today, please like. So push the like button so that then anybody else who's looking for this type of content will find us easily. And of course, please do make sure that you come back and join us for the next episode. I will of course be sending out a follow-up email, and that goes to everybody who is on our mailing list at www.vectorvest.com/FFF, 3Fs/FFF. Just again, if I could ask one of the guys to just pop that there into the chat. Joey, if you're still here with us, you might just pop that in. That would be super. Thank you again to everybody for being here. I'm going to see you next month, and next week I'm going to talk to you from Fantastic Female Fridays, where I'm interviewing a fabulous woman called Larissa Feeney, who's going to talk to us about what the accounts hide. So when we look at earnings per share, what do we not see? So that is going to be an episode definitely worth tuning in for. If you want to be automatically reminded, again, sign up for vectorvest.com/FFF. And then thanks a million there. Joey has just popped that there into the chat. Then you get an email with the follow-up emails that I send out, as well as upcoming episodes. And if you subscribe to the channel, you'll know when all of us are going live. So just make sure and hit the bell button so that you know the minute that we are ready to rock. So thank you very much indeed to all of you, and thank you for your lovely messages to me saying thank you too. I am going to see you next week for Fantastic Female Fridays, next month for the ESG and Tech show. Thank you everyone, and goodbye.